You're watching Silver News Daily. Subscribe for more. Are you ready for a market shift that could change your financial future? Gareth Soloway, the renowned chief market strategist at Verified Investing, has just made a bold prediction. Silver is set to skyrocket to $3,000. That's right. He believes it's time to sell all your crypto and stocks and stock up on silver. This isn't just another market rumor. It's a strategic move backed by deep market analysis and economic indicators. Stay tuned as we dive into why Soloway is making this call and how you can position yourself to potentially reap massive gains from this impending silver surge.
And you're right about that. That level on silver is a huge level. In fact, it's basically been a level there. If we look at the chart, we've seen it hammer into, this is actually the fourth time it's hit $30, right? So if you go back to 2020, we hit it once, 2021, and then more recently, we've hit it again in April, and then here in May again. So the way technical analysis works is that the more times you hit a level, the weaker it becomes. And I do think, we may be due for a small pullback here, but I think it ultimately breaks to the upside. And I love to kind of show the comparison if we look at gold, because gold had the same formation, right? The only difference is gold has broken out already. But if we look at this, right, we could do 1 hit, 2 hits, 3 hits, 4. And then basically you had 5 in consolidation and then the breakout. And so what it does is it tells us that it seems like around the 5th hit of the line, that's where you get to that breakout point. And so going back to silver, that's kind of what I'm expecting here. Maybe just a small consolidation move back off of this level and then a big breakout at 30 to kind of take us to maybe 35 in the near term. But really, I think it's the start of maybe a short squeeze that could take us even higher.
Now, when it comes to gold, I mean, obviously we are seeing, we did already see the breakout there, but when it comes to silver, what is your take on the levels we're going to be seeing next once we break through this 30 level?
Yeah, so if we zoom out to a bigger time frame here and we go to our weekly chart, what we can see is, again, here's your $30 level right here. And then the next big pivot point where we saw a big push up was around the $35 level. So just looking at that as a technician on the charts, that would be your first resistance. So we really should go for, once we break 30, I think within literally a week or two, we probably find ourselves at 35. And then there'll be a minor resistance at around 37.5. But really, I think if you ask me where this is in the next year to 2 years, I do think we are retesting that $50 major high on silver that was made in 2011. So I really do think, I think again, one of the things investors in silver have to understand is that it is partially an industrial metal, right? So it's a store of safety, but also industrial. So if we did see a slowdown in the U.S. economy, it might come back in a little bit. It might consolidate a little bit, but you can't deny that the U.S. government is going to continue to run up the debt. The Fed is already talking rate cuts this year, even with inflation north of 3%. And so all of these type of things lend us to believe that over the longer term, precious metals will go higher.
Gareth Soloway is no stranger to making bold and accurate market predictions. As the chief market strategist at Verified Investing, he's built a reputation for cutting through the noise and delivering clear, data-backed insights. In his latest analysis, Soloway sees a perfect storm brewing that could send silver prices soaring to unprecedented heights. He points to a mix of market psychology, economic instability, and a looming demand surge for precious metals. Soloway's insights come from meticulously studying market trends and understanding the underlying forces at play. Today, we'll explore these insights and understand why he believes silver is about to become the most lucrative asset in your portfolio.
In fact, and miners have been now outperforming, right? So miners underperformed in 2021, 22, and 23 because inflation was so high and the price of these metals were not going up to compensate the miners for that. So they just got crushed by having to pay for higher labor costs, higher equipment costs, all these costs. But now we're seeing the metals play catch up, and the higher the metals go here, the more money these miners can make. So I think, again, on pullbacks, miners are great opportunities as long. I'm pretty confident. It's not to say we're not going to pull back. I actually do think we could pull back to 2,200 just because, it's a technical support level. And I think, you almost have too much bullishness right now. You got to kind of flush out a few of the weak hands, but it certainly is, as long as we don't on a technical basis get back below that 2075 level, then it's buy on pullbacks versus sell on rips. So you want to buy on pullbacks and then look for higher highs unless we get back below that 2075 level.
Why sell crypto now? Gareth Soloway believes the crypto market is facing significant headwinds that could hinder its performance in the near term. Volatility remains high, and recent regulatory crackdowns have only added to the uncertainty. Soloway points out that the speculative nature of crypto investments makes them especially vulnerable in the current economic climate. As investors look for safer, more stable assets, silver emerges as a compelling alternative. With its historical resilience and tangible value, silver offers a hedge against the kind of volatility that has plagued the crypto market. Let's delve deeper into these risks and understand why Soloway advocates for reallocating investments from crypto to silver.
I think that, again, if you're looking at, there's different reasons to invest in platinum. We know platinum and palladium are used in industrial metal, production of different things. And so I think a lot of people look at it and say, oh, well, if the U.S. economy is slowing, maybe these aren't the places to be. But I would take it from the other perspective and say, well, how do you protect? This is a precious metal, platinum, that is actually something like 10 times more rare than gold. And so for me, in thinking of how do I protect my wealth, platinum and palladium both do get my attention. And I think, again, part of it is as a metals investor, I want to be diversified, just like as a stock investor or a crypto investor, you want to be diversified. And so, yes, you've been starting to see that momentum building in platinum here. If we go to the daily chart, you can see this run here on the daily. It's starting to kind of stall out a little bit, which is normal after such a big run. But I think on pullbacks, you look to kind of continue to accumulate this. And then on palladium is actually my favorite here, because it still hasn't broken out yet. And so we see this big wedge pattern, and look at where this thing was trading, just a few years ago. It was trading north of $2,000 per ounce. And here it is underneath 1,000 an ounce now. So for me, I look at this and I say, okay, well, if it breaks this downsloping trend line, now we have a breakout, and that's where the bigger gains could come, 10, 20, 30% upside in a very short amount of time.
Silver isn't just a shiny metal you might find in jewelry. It plays a critical role in several key industries, and this demand is a major factor in Gareth Soloway's prediction. One of the most significant drivers of silver's value is its extensive use in industrial applications. As the world moves towards renewable energy, silver is becoming indispensable, especially in the production of solar panels. Silver's superior conductivity makes it an essential component in photovoltaic cells, which are the building blocks of solar panels. With governments worldwide pushing for greener energy solutions, the demand for solar panels, and consequently silver, is expected to skyrocket. But the story doesn't end with solar energy. The electronics industry is another major consumer of silver. From smartphones to computers, and even electric vehicles, silver's excellent thermal and electrical conductivity ensures it remains a critical material. As technology continues to advance and the demand for electronic devices grows, so does the demand for silver. This industrial use creates a stable and increasing demand that supports silver's price. Moreover, silver's role in the automotive industry, particularly with the rise of electric vehicles, EVs, cannot be overstated. EVs require a significant amount of silver for their electrical systems, and as the market for these vehicles expands, so too will the need for silver. Analysts predict that by 2030, the automotive sector alone could consume over 100 million ounces of silver annually. These factors contribute to a robust demand profile for silver. But what about supply? Silver mining is not as straightforward as it might seem. Unlike gold, which is often mined in dedicated operations, silver is frequently a byproduct of mining for other metals like copper and zinc. This means that the supply of silver is less responsive to changes in its price. If demand surges, it can take significant time and investment to increase production, leading to potential shortages and therefore higher prices. In his analysis, Gareth Soloway emphasizes these points to highlight why silver is poised for a major price increase. The industrial demand, combined with limited supply growth, sets the stage for a substantial rise in silver prices. Investors looking for stability and growth potential may find silver to be an attractive alternative to the volatility of cryptocurrencies and the overvalued stock market. By understanding these industrial dynamics, we can see why Soloway believes silver could reach as high as $3,000. This isn't just speculation. It's a prediction grounded in the realities of market demand and supply constraints.
Good question. So I think that we are going to see interest rates, at least in the bond market, stay elevated above what we're used to, right? So, we know that a few years ago, bond market, who wanted to be in the bond market for 1-2%? But ultimately, I do think that it'll stay between 3 and 5% going forward. And I do worry that if the Federal Reserve decides to print us out of a recession, if political pressure is high enough and we start printing those dollars again, I really do worry that we may see even higher yields on the bond market, on the 10-year, on 30-year down the line. And again, and you could go historically and say, okay, well, before the Fed was really printing money actively, going back to 2009, let's say, interest rates were much, much higher. And so, really, they've been artificially pushing them down because they've been lifting the stock market. And again, that pushes money into the stock market. And obviously what they've been doing with buying bonds and quantitative easing. But I do think that this is not going to end well. One way or the other, we're going to have to pay for the leniency and the printing of money that we've been seeing. And which brings us back to where do you put your money? And the answer is, well, I mean, you could put it in the bond market potentially and get 5% right now. But really, the metals are very intriguing. And this is one of the reasons why Bitcoin is becoming more alluring to not only, retail investors, but also institutions. Institutions see the writing on the wall. They have the best data out there. They're seeing what's going on.
Silver's potential isn't just a matter of current demand. It's also rooted in its historical performance during times of economic uncertainty. Gareth Soloway points to silver's track record as a reliable hedge against market instability and inflation. When traditional financial markets become volatile, investors often turn to precious metals like silver to preserve their wealth. This historical perspective is crucial for understanding why silver is a safe bet in today's uncertain economic climate. Looking back, silver has consistently performed well during periods of economic turbulence. For instance, during the 2008 financial crisis, silver prices surged as investors sought refuge from the collapsing stock market. Similarly, during the inflationary period of the 1970s, silver saw significant price increases, outperforming many other asset classes. These historical trends are not mere coincidences. They reflect silver's intrinsic value and its role as a staple investment during times of economic stress. One of the key reasons for this stability is silver's dual role as both an industrial and a precious metal. While its industrial demand keeps it in constant use, its status as a precious metal makes it a safe haven in times of financial uncertainty. This dual demand ensures that silver maintains its value better than many other commodities, which might be more susceptible to economic cycles. In the current economic environment, several factors suggest we might be heading towards another period where silver shines. Inflation rates are climbing, driven by unprecedented levels of government spending and monetary stimulus. The Federal Reserve's policies, aimed at supporting economic recovery, are also contributing to fears of long-term inflation. As the value of paper currency potentially diminishes, tangible assets like silver become more attractive to investors seeking to protect their wealth. Moreover, geopolitical tensions and global trade uncertainties further enhance silver's appeal. In times of political instability, investors often flock to precious metals to hedge against risks associated with currency fluctuations and economic sanctions. Silver's universal acceptance and liquidity make it an ideal choice for such hedging. Gareth Soloway's prediction is rooted in these historical precedents and current economic indicators. He argues that the same factors that drove silver's price up in the past are present today, creating a perfect storm for another significant price surge. For investors, this means that allocating a portion of their portfolio to silver isn't just a speculative move. It's a strategic decision based on historical evidence and current market dynamics. By looking at silver's past performance and understanding its role in today's economic landscape, we can see why Soloway is so bullish on its future. As inflation concerns grow and market volatility continues, silver stands out as a reliable asset that can help protect and grow wealth. This historical perspective provides a solid foundation for his prediction and offers investors a clear rationale for considering silver as a key part of their investment strategy.
And that's so tough. So I don't think that it will be officially proclaimed a recession until after, but I do think that there are, so basically already we know that, Red Lobster is likely filing for bankruptcy in a month. We've seen Boston Market. We've seen other fast food casual kind of places going out of business because anyone making, let's say, less than 60,000 is essentially now being priced out of going out to eat. And really even McDonald's has said that people making under 50,000, they can't even afford to go to McDonald's. And so you're seeing the recession already hit the lower income brackets. But I think once the stock market stops making new all-time highs and corrects, you will see it then hit the middle income and even the higher end end consumer. And so I think it's a rolling recession where some people already feel it, but you're not going to see it proclaimed a recession until probably December or January of 2025. I do think it will cool inflation. For instance, the crude oil chart is borderline at a breakdown already. In fact, I can show my chart here because I think it's worth taking a look at. So we've seen a top already in crude oil, and we can see it's hovering just under this major support line, or just on this major support line. And eventually, I actually think it does break to the downside here and collapse. And we've also seen gasoline, UGA is the symbol for that. That's actually come in significantly, even with the bounce that it's seeing the last couple days. So a lot of these type of things are telling us that inflation probably starts to cool a little bit, but I'm still skeptical that we're ever going to really see a significant move below 3%. So I think I think right now the year over year reported in the CPI was 3.6%, or maybe 3.4. But either way, I think it comes in and stops going up, but I don't foresee it going significantly lower because, again, the Fed, as soon as we hit a recession, the Fed's going to come out and make policy much more lenient, and the government's just going to spend more money to make sure that they get reelected.
Current market trends also reinforce Gareth Soloway's bullish outlook on silver. The silver market has been exhibiting strong signals that point to a continued upward trajectory. In early 2024, the A-Shares Silver Trust, SLV, an exchange-traded fund that tracks the price of silver, resumed its bullish trend after a year of sideways movement. Analysts have observed the development of a new impulse wave, indicating a robust upward movement in silver prices. Technical analysis of SLV reveals a clear pattern. After reaching a low of $20.07 in January 2024, silver began to climb, marking the start of a new bullish cycle. This upward momentum was further confirmed when the price broke through previous resistance levels. By May 2024, SLV had entered into wave 3 of a larger Elliott wave pattern, suggesting that the current rally has more room to run. Technical projections indicate that silver could reach the $29.94 to $30.45 range before encountering significant resistance, setting the stage for even higher targets in the longer term. Moreover, the silver market is witnessing increased interest from institutional investors. Large financial institutions and hedge funds are starting to recognize silver's potential as a hedge against inflation and economic uncertainty. This influx of institutional money is a strong indicator of market confidence and can drive prices higher as demand outstrips supply. The physical silver market is also experiencing tightness. Reports indicate that silver inventories at major exchanges are dwindling, reflecting strong physical demand. This scarcity is further compounded by the increasing difficulty in mining and producing silver, as it is often a byproduct of mining for other metals. As a result, any significant increase in demand can lead to sharp price spikes, given the limited supply. In addition to these technical and supply-demand dynamics, macroeconomic factors are also in silver's favor. The global economic outlook remains uncertain, with ongoing concerns about inflation, rising interest rates, and geopolitical tensions. These factors create a perfect environment for safe haven assets like silver to thrive. Investors are increasingly seeking to diversify their portfolios with tangible assets that can provide stability and security in turbulent times. Gareth Soloway's analysis aligns with these trends. He emphasizes that silver is not just a speculative play, but a strategic investment grounded in solid market fundamentals. The current bullish trends in the silver market are supported by technical analysis, institutional interest, and macroeconomic conditions. As more investors recognize these factors, the momentum behind silver's price increase is likely to build, pushing it towards and possibly beyond the $3,000 mark that Soloway predicts. For individual investors, this means there is a compelling case for increasing exposure to silver. Whether through physical bullion, silver ETFs like SLV, or silver mining stocks, there are multiple ways to capitalize on this trend. By understanding the current market dynamics and aligning with Gareth Soloway's insights, investors can position themselves to benefit from what could be a significant upward movement in silver prices.
So absolutely. So one of the things that I've been looking at here is if we go to our weekly chart, and this is a pretty powerful chart, and if we go back to the pre-Great Recession stock market, right? So basically, this is when we were making new all-time highs back in 2007, just before the collapse. If you take a trend line from those highs and you run it through the highs of 2022, we are just about into that level. So right off the bat, that's something catching my eye. It's right around, looks like right around 53.50 as a high. So we're only about 30 to 35 points away on the S&P from that level. On a technical basis, that's going to be significant. The other thing I love to tell people about is just to remind people that markets tend to make this M top pattern, and the second high is higher. And I love showing this, right? So here's your first wave. Then you had your correction. Then the buyers step in and we make a higher high. And oftentimes what ends up happening is we see a bigger breakdown afterwards where we get this monster move down. Now, a lot of people would say, well, where the heck does that come from? I mean, why is that going to happen? And number one, it doesn't guarantee that it's going to happen. But if we look at Bitcoin, right, let's go to the Bitcoin chart and we go back to the 2021 high. Take a look at what happened. We had the big run up, the middle corrective move, then we made a higher high, and then we all know what happened to Bitcoin. It went down basically 75%. If we look at natural gas, which is just off the top of my head, another chart that this happened with, take a look at what happened. Big run up, pullback, then we made a higher high, and then we corrected 88%. Now, by no means do I think the S&P is going to go down 88 or 75%. But my point is that when we make these higher highs, it's not a guarantee that the bull market's going to take off again. In fact, historically, this is one of those things where you kind of squeeze out the shorts when you take out the previous all-time high. And then once those shorts are out and the max bulls are in, that's when the market actually has its bigger corrective move.
Gareth Soloway's bold prediction that silver could reach $3,000 is not just based on current trends and market dynamics, but also on a detailed technical and fundamental analysis. Let's break down the reasons why this unprecedented surge in silver prices is possible. Firstly, let's talk about the technical analysis. Silver has been trading in a long-term consolidation pattern for several years, but recent movements suggest a significant breakout is on the horizon. Technical analysts, including Soloway, have identified a critical resistance level at $30. This level has been tested multiple times over the past few years. The more a resistance level is tested, the weaker it becomes. Once silver breaks through this $30 barrier and stays above it for a couple of days, the path to $50 becomes clear. This initial breakout would attract more buyers, both retail and institutional, driving the price higher due to increased demand. Beyond the $50 level, Soloway predicts that silver could reach as high as $3,000 in the near future. This may sound extreme, but it is grounded in solid analysis. The next significant resistance levels after $50 are projected to be at $100, $500, and then $1,000. The move from $50 to $100 could happen relatively quickly due to the momentum and the nature of market psychology. Once silver hits $100, the market dynamics could shift dramatically. A combination of short squeezes, increased industrial demand, and investor FOMO, fear of missing out, could drive the price to $500 and beyond. Fundamentally, several factors support this potential price explosion. The growing industrial demand for silver, particularly in renewable energy and electronics, has been highlighted earlier. But let's also consider the macroeconomic environment. Governments around the world are dealing with unprecedented levels of debt. The U.S. national debt, for example, is over $34.5 trillion, and the interest on this debt is ballooning. This creates a scenario where central banks may continue to print money, leading to inflationary pressures. Silver, like gold, is seen as a hedge against inflation. As investors seek to protect their wealth from devaluation, the demand for silver could skyrocket. Moreover, silver's dual role as an industrial and precious metal means it benefits from both economic growth and economic distress. During periods of economic growth, industrial demand drives prices up. During economic downturns, its value as a safe haven asset kicks in. Additionally, geopolitical tensions and potential economic sanctions can lead to increased demand for silver. In uncertain times, investors flock to assets that are globally recognized and liquid. Silver fits this bill perfectly. Soloway also points to the possibility of a supply crunch. Silver production is not as responsive to price changes because it is often a byproduct of other mining activities. Increasing production to meet higher demand can take years. If demand spikes suddenly, the existing supply constraints could lead to dramatic price increases. In summary, the combination of strong technical indicators, robust industrial demand, inflationary pressures, geopolitical instability, and potential supply shortages creates a perfect storm for silver prices. Gareth Soloway's prediction of silver reaching $3,000 may seem ambitious, but it is rooted in a thorough analysis of market conditions and historical precedents. Investors who understand these dynamics and position themselves accordingly could stand to benefit significantly from this potential market shift.
So I kind of liken what we're seeing right now to, pre-2008, where we all saw the deteriorating housing market. We saw what was going on with the financials, and there was still a multiple period month where the stock market made new all-time highs because, retail investors are not focusing on that. They're chasing momentum. They're feeling FOMO, fear of missing out. And so I liken that period and what we even saw in the late 1990s into 2000 before the dot-com crash as what we are seeing right now. So you're right, the Dow amazing to pierce that huge even number, but I don't necessarily think it's going to last. And I say that because if you look at the data, right, I mean, we got lots of data this morning. We've seen GDP come in weaker than expected. We've seen the non-farm payrolls weaker than expected. We've seen U6 unemployment creeping up now for the last 12 months. These are all signs of a recession on the horizon. Now, the reason why investors are so eager to buy is because in the investor mind, they're like, well, the Fed can just print us out of this mess. Well, yes, if inflation was 2% or lower, but if you still have a 3% or 3.5% inflation rate, how does the Fed print a lot of money knowing that it's going to contribute to another wave like the 1970s of inflation? And so there's going to be this pivot where the retail investor finally realizes what's going to happen. And I do think at that point, the stock market has a massive leg down in its future. And probably over the next 6 to 12 months, it's going to happen.
For those considering following Gareth Soloway's advice and shifting investments from crypto and stocks to silver, understanding the practical steps to invest in silver is crucial. There are several ways to gain exposure to silver, each with its own set of advantages and considerations. Physical silver. Investing in physical silver means buying silver bullion bars, coins, or rounds. This is the most direct way to own silver and has the benefit of being a tangible asset. Popular choices include American silver eagles, Canadian silver maple leafs, and silver bars from reputable mints. Storing physical silver securely is important, and investors need to consider storage costs and insurance. Silver ETFs, exchange-traded funds, ETFs, like the A-Shares Silver Trust, SLV, offer a convenient way to invest in silver without needing to store physical metal. SLV tracks the price of silver and provides exposure to silver's price movements. ETFs are liquid, easy to trade, and can be held in brokerage accounts, making them a popular choice for many investors. Silver mining stocks. Investing in companies that mine silver can offer leverage to the price of silver. When silver prices rise, the profits of silver mining companies typically increase, which can lead to higher stock prices. However, mining stocks come with additional risks related to the operational and financial health of the mining companies. Some notable silver mining companies include First Majestic Silver Corp.
Yeah, so on silver, you're watching for a $30 break. And if you can get a $30 break where price stays above 30 for, let's say, a 2-day period, I think the next leg up is to 35, then 37.50. If you're asking for a longer term price point, I would say the $50 level is where it's ultimately headed in the next, let's say, 12 months, maybe 12 to 18 months. On gold, going into this year when we were below 2,000, I had a $2,500 price target. I still think that gets hit this year, a pierce of 2,500. And then I think, again, if things play out like it's looking, you could be looking at a 3,500, maybe even $5,000 price point on gold, but that would probably be a few years out, probably 3 to 5 years out, $5,000 on gold, but certainly an amazing move on gold.
Gareth Soloway's bold prediction of silver reaching $3,000 may seem far-fetched at first glance, but when you consider the confluence of factors driving this potential surge, it becomes a compelling possibility. Let's pull together all the insights and understand exactly how this extraordinary price level could be achieved. Firstly, the macroeconomic environment is ripe for a precious metals boom. Inflation is on the rise, driven by extensive government spending and monetary easing policies. Central banks around the world are grappling with high levels of debt and are likely to continue printing money to manage these obligations. This ongoing monetary expansion devalues fiat currencies, making tangible assets like silver more attractive as a store of value. In addition, geopolitical tensions and global economic uncertainties are pushing investors towards safe haven assets. Silver, with its historical role as a hedge against economic instability, stands to benefit significantly. The ongoing trade disputes, potential conflicts, and political unrest in various parts of the world add layers of uncertainty that typically drive demand for precious metals. From a supply perspective, silver production is not keeping pace with the growing demand. As we discussed, silver is often a byproduct of mining other metals, meaning its supply cannot be quickly ramped up in response to price increases. This supply constraint, coupled with rising industrial demand, particularly in renewable energy and electronics, sets the stage for significant upward pressure on prices. The technical analysis also supports a bullish outlook. The critical resistance level at $30, once breached, is expected to lead to rapid price movements due to market psychology and technical trading patterns. Historical data shows that breaking significant resistance levels can trigger a cascade of buying, pushing prices to new highs quickly. Soloway's projections of silver moving from $30 to $50 and eventually to $100, $500, and beyond are based on these well-established technical patterns. Furthermore, institutional interest in silver is growing. Hedge funds and large financial institutions are starting to allocate more capital to silver as they seek to diversify their portfolios and hedge against inflation. This influx of institutional money adds significant buying pressure to the market. Let's also consider the potential for a short squeeze. With many traders shorting silver in anticipation of lower prices, a sudden price increase could force them to cover their positions by buying back silver, further driving up the price. This scenario played out dramatically in the silver market in the past and could happen again under the right conditions. Gareth Soloway's prediction is not just about market trends and economic indicators. It's about understanding the broader financial landscape. The convergence of rising industrial demand, inflationary pressures, supply constraints, geopolitical uncertainties, and strong technical indicators creates a perfect storm for silver prices to soar. For investors, this means there is a unique opportunity to capitalize on these trends. Diversifying into silver, whether through physical bullion, ETFs, mining stocks, or other investment vehicles, offers a way to protect and potentially grow wealth in the coming years. As we conclude, remember that while the potential for significant gains in silver is substantial, all investments come with risks. It's crucial to do your own research, consider your financial situation, and consult with financial advisors to make informed decisions. So will silver reach $3,000? Gareth Soloway believes it's possible, and the underlying factors certainly make a strong case. As we navigate through these turbulent economic times, silver could indeed shine as the ultimate asset, offering safety and growth in an uncertain world. Don't miss out on this potential opportunity. Subscribe to our channel for more insights and stay informed about the latest market trends. And remember, this analysis is not financial advice. Always do your due diligence before making investment decisions.